Welcome back to Everything Money. In this video, you will hear our thoughts about Facebook, Meta platforms, the new universe, everything that is Facebook and its stock. We'll show you the financials of how this stock has been beaten down in the last 3 months. We'll go over what we think it's worth using the stock analyzer tool, what you should be paying for Facebook, Meta moving forward. I got 2 brand new Oculus. We're going to talk about it. We'll also head over to Mo. He'll show you all the charts and trends on trading this stock. You can make money on these up and down swings, and we'll show you how. But first, why should you watch this video? I bring your questions to a couple guys who own and operate over $100 million in real estate, multiple businesses, and stocks, and they will provide us with a mindset, a business owner's mindset about how we should move forward owning Facebook and where it can go in the future. I give you Paul Gabriel.
Thank you, Sethi. Please follow us on Instagram, Everything Money Investing, and don't forget to follow our personal accounts because we really like seeing our personal
numbers go up. The Instagram numbers, of course.
Just like stocks going up. I don't know. Okay, so let's go to our exclusive software, 8 Pillars tool. Type in Facebook, Meta platforms, whatever it's called now.
Paul, our last video, you had on the Oculus. We introduced you to the new world that is Meta.
Yeah, you know, I've been reading more about it lately and all the things it can be used for. I even thought, like, you know, viewing houses and real estate deals. And also, was it you yesterday talked about how, you know, if you all of a sudden want to have dinner with friends and you can't do it, you guys go to this Metaverse and you guys are all sitting there right in front of each other talking.
So now what they're doing is people are buying real estate in there. Somebody spent $3.5 million and they bought a piece of land in the Metaverse. And their point is this is going to be their new house. And now they can invite their friends over and they'll sit inside of here and have like hang out together. $2.5 million.
Was it 2.5 or
2.5? Sorry, 2.5 and 3.5.
So the question I brought up is, how are
we finance it?
I was going to say, how are we buying land in an infinite world?
So here's the greatest part.
With any location. Location.
So there's regulations in the real world. I mean, you can't like build a house that hovers, but in the Metaverse, it's infinite. You can build a house that hovers above everything.
Still have rules in there, I assume.
Not now. So get your oven mitts out and go buy all the hovering air you can.
So this stock was at $382 just 2 or 3 months ago.
Yeah,
got as low as 307, and now it's back up to 325. Okay, so let's go look at what do we look at? Facebook, Metaverse, Meta platforms. $915 billion market cap. Pillar number 1, we want the 5-year PE under 22.5. It is 38. That's an X. But remember, guys, fast-growing companies like Facebook, when I say fast growing, yeah, their user growth isn't necessarily fast. However, their revenue and profit growth is very fast. And we'll look at that shortly. You want to be able to pay, you should be able to pay more for those kind of companies. Pillar number 2, we want the 5-year return on invested capital greater than 9%. It's 14.3. Check mark there. So 1X, 1 check, no dividend, not a shocker there. Pillar number 3, we go to the income statement of our exclusive software. We look at the revenue numbers. We want to see revenue growth over the last 5 years. 35.8 to 109. That's what I meant by fast growth. It has tripled. It has tripled in the last 5 years.
Wow.
Pillar number 4, we want to see the net income growth over the last 5 years. We scroll down a little bit. 15.2 to 40. Check mark there. So it's interesting. Their profit hasn't jumped up as much as their revenue has. I find that to be odd. Their revenue's tripled and their profit's up 2.6 times. It's not that far off, but it's still, you would think with a high gross margin, it would be going faster, but we'll get into that later. Pillar number 5, we want the shares outstanding decreasing. Now, an expensive company like this, with a high PE, not necessarily we want shares going down, but the reason we like shares going down overall is it gives you, the investor, a bigger piece of the pie. Because if you have 10 shares on a 100-share company, you own 10% of the business. If they decrease those shares to 80 outstanding, you still own 10 shares out of 80 now. You own 12.5% of the business instead of 10. Okay, so we scroll to the bottom of the income statement in our software, 2.9 billion to 2.81. Check mark. Now, again, an expensive company, I don't necessarily want the shares being bought back, but this isn't a ton. So I'm okay for now. Pillar number 6. What's pillar number 6?
This is total long-term liabilities divided by 5-year free cash flow, and we want this multiple under 5.
So that was confusing.
Sorry.
No, you say it the right way, but it's confusing to hear.
You're right. Yeah.
What I want to do is I want to find companies with manageable debt. So what I do is I go to the main page of our exclusive software. I go to the 5-year average free cash flow number posted right here. I multiply that by 5. So that would be $107.5 billion. 21.5 times 5 is 107.5. I want their total long-term liabilities under that 107.5 number. So very simply, we scroll up to the top of our software, go to the balance sheet, scroll all the way to the bottom, long-term liabilities of 18 billion. We won at less than 107 billion.
Yeah, that's laughable.
It's laughable. Now, here's the best part. Go to their current assets, $75 billion. They have $75 billion in essentially cash. Go to their total liabilities, $36 billion. They can take all the cash in their account and pay off all their liabilities and still have $40 billion left over. That's awesome. Facebook ain't going under, is my point. They're not going to be called on creditors, because if creditor calls them and says, we don't like your debt, if I were Zuckerberg, I'd be like, oh, cool, where do I send the check, a-hole? That's what I would do.
Any guesses on how many Oculus units have sold this year?
Oh,
no idea.
1 million.
10.
10 million?
Really?
There's a partnership
We're
with...
saying 10 units or 10 million?
10 million.
Okay.
There's a partnership with Qualcomm that we don't bring up that often, Mo.
Yeah,
What do you know about it?
I don't know anything about
The
it.
chips?
I just know that the Qualcomm stock has just soared ever since that partnership was announced. But I don't know anything about it, to be honest with you.
All right, Paul, keep going.
And Oculus was bought, I believe I remember Zuckerberg literally went to the guy's house, knocked on the door and said, hey, I want to buy your company. Let's go for a walk.
Wow.
I believe that was the Oculus purchase.
I'm not sure. I heard it from you, yeah.
That was Instagram.
Pillar number 7 is free cash flow growth. We want their free cash growing, of course, and they can do multiple things because of it, Paul.
Correct. So we go to the cash flow statement of our exclusive software. Now remember, guys, free cash flow is cash from operations less your capital expenditures. You can do 5 things with that. You can pay dividends, buy back shares, pay down debt, make acquisitions, and invest back in yourself. So this is the lifeblood of the company. So cash from operations less your capital expenditures. Your Uncle Paul, in his infinite love for you as my child, I've added the free cash flow line here. That way it does the math all for you. 5 years ago, 15.7 billion. Last year, 35 billion. Check mark there. So I want to make note that revenues tripled and their free cash flow has just gone up by a little over 2.3. I don't know why that is with such a high margin business, but either way, I'm just making note of that. Our final metric.
Could it be that they're reinvesting in themselves a lot?
Yeah, but what we do then is you want to look at the capital expenditures as a percentage of the revenue. And maybe it has gone up. Actually, let's look at that. It was 5.7 on 35. That's 1/7. 17.8 on 130. It is a little bit higher. It's a little bit higher.
Yeah.
Okay, it's a little bit higher. You're right.
Pillar number 8.
Pillar number 8, we take the 5-year average free cash flow and multiply by 20. What we're trying to do here is we're trying to come up with a market cap to pay for the company. This is not set in stone. Again, faster growing businesses should have a higher multiple. But for the software and the 8 pillars, we start with a general idea of 20. Just like the PE of 22.5 in the 5 years, we want to look at 20 times free cash flow. So 21.5 times 20 is $430 billion. Nope. Yes, $431 billion.
Uh-oh.
Versus 918.
Yeah.
That's an X. Does that mean this company should be ignored? Not necessarily. What we're going to do next is we're going to use our stock analyzer tool. Every investment is the present value of all future cash flow. So when we use a stock analyzer tool, we don't know the future. We're making assumptions about the future, but it'll tell us what price to pay based on those assumptions. And those assumptions, very first line, is the growth numbers. But let's go to the 8 pillars tab first. This software does it all for you. It just shows you the 8 pillars instead of doing all that numbers, all the calculations. And guess what? Everything's a check except for the valuation metrics.
Yep.
Again, don't think that Facebook is overpriced merely because of these numbers. If it's growing 100% per year for the next 10 years, I would gladly pay this. I would buy I would sell my soul. I would sell Seth's soul.
Yes.
I would sell Seth's kids.
Yes.
I would sell Xavier's future unborn children. I would do everything to buy Facebook if they're going to grow 100% a year for the next 10 years.
It's a little extreme and rash.
It's not extreme. I would absolutely do that. I wouldn't care about you.
Okay.
I'm just kidding. Okay.
Can I get this usership number out there? This is from Zuckerberg on a investor call. 2.6 billion people use one or more of their apps each day, and 200 million businesses use their tools to reach customers.
200 million businesses?
2.6 billion people each day.
Jeez.
Facebook, WhatsApp, Instagram, whatever else they do.
That nerd from Harvard.
All from a little website he made.
Yeah, a little website. The Facebook. Yeah, of course.
Stock analyzer tool, Paul?
All right, so let's go to stock analyzer tool. Yeah, exactly. Good for him.
Want to plus in one?
10, what was that?
Blow it up a little bit.
Oh, sorry. So we're going to blow up a little bit. First thing I do, guys, I go to 10-year analysis. And for those of you who've watched our videos, you know this. For those of you who haven't watched our videos, this is awesome. So 10-year analysis. What we're doing, first number, revenue growth. It shows you your 1, 5, and 10-year numbers. Mo, remember, my goal here is to be conservative. Not insanely conservative, but conservative. I know Mo's going to go higher than me because he always does.
I'm going to try to go in your wheelhouse. 20, 25, 30? Or is that still high for you?
So let's look at the numbers here.
Well, Paul, I'm a little confused because you always say that when a company gets this massive, they can't grow like this, and sure enough, they are.
So
Correct.
I'm not sure if they're
So at
done
30%
yet.
revenue growth, Mo,
Yeah.
for the next 10 years, they did 100 and what in revenue last year? 120?
112, yeah.
That would take them to $1.6 trillion in revenue 10 years from now.
10x.
That's a lot.
13x.
Oh my gosh, you're
So
right.
I look at it
I guess
going-
my question is, are they getting any money from this real estate in the metaverse?
My numbers were 10, 15, 20.
Oh, geez.
Because look at it. Look at 15% revenue growth. 1.15 to the 10th power times 112. It still makes them a $500 billion revenue business, which is a lot still.
It's still a lot. I guess when I think of these numbers, like you say, like what was it, 1.2 trillion in revenue or whatever you just said?
1.6.
Yeah, but I look at these companies and like probably 10 years ago we would look at Amazon and Apple and say they're not going to do
100%,
half a trillion
100%
or this
agree
and
with
that.
you.
So that's when I see it, I'm like, yeah, that's a huge number. But 10 years from now, will that be a huge number for a leading company?
But
if they're still
remember,
leading?
we want to be conservative
Yeah.
and buy under a conservative assumption. I
right.
still think 20% revenue growth takes them to $700, $800 billion in revenue. That's a lot of revenue. That'd be the biggest company today. Now, granted, that's 10 years from now, but the biggest companies today are doing what the biggest company 10 years ago did in revenue, essentially. So I look at that going, okay, and do we think the next 10 years is going to be as good as the last 10 years, considering we just came off a massive global recession 10 years ago? That's where I look at it going. Now, with that said, the metaverse and online advertising is way bigger now than it was 10 years ago. I was still advertising our apartments were still being advertised in the print version of our apartment guide 10 years ago. Now, does anybody see an apartment guide anywhere? No. So I still think 10, 15, 20, because I think 20%, Mo, still gives them $700 billion in revenue. And to me, that would be a massively successful business.
Okay.
Let's do this. Let's do 12, 16, and 20.
Okay.
Profit margin.
Go back to stock analyzer. I would have to say that it has to stay around this low 30s number, right?
Yeah, so let's go 30, 32, 34.
Good.
Free cash flow.
Looks like the same to me.
Okay, we'll do that. PE.
14, 16, 18.
I agree. Free cash flow, same thing. Return, 12.5%. Why 12.5%, guys? If you invest in an ETF and put it away and don't think about it, you'll get 9 or 10% a year over long periods of time. So make it worth your while. Have your margin of safety, 12.5%. Let's hit the analyze button. Guys, I think I said to people I was buying below 280. So right now, it says in the low end, you should pay 273, high end 650. So guys, if you believe Facebook will grow at 15% revenue a year, you are buying it all day long today. All day long. All day long. Now for me, I'm a conservative investor, a value investor. I'm going to wait for it to be under 280. And I've said this to people over and over. I'm waiting for it to go under 280 or the fundamentals to increase above what I expected and the stock to stay flat. So that's where I am. And this is what's so great about the stock analyzer tool. It allows you to go in here and do it yourself and make your own assumptions and not listen to the idiot who's wearing a hoodie in front of you today.
If you're watching this for the first time, and this might be incredibly eye-opening, it is to me to see this stock analyzer tool, how it works. You can have this software right now in a couple clicks. Paul, tell them how they get it.
What we have done here is we created the software because people wanted to be able to, our users wanted to be able to analyze companies without waiting for me to discuss them on the show. So we created the software. You get everything you see here. You get it all on your mobile phone, literally everything on your mobile phone. So you're on the go, you can do it. You get 30 years of financial data. You get access to Seth, Mo, and I. You get all the 8-pillar analysis, the stock analyzer tool. You even get everything on the main page that's coming soon, which is things like the real estate analyzer tool, stock screeners, watch charts, chart trading. Everything here will be coming to you. You get retirement calculator, you get the 8-pillar portfolio, you get exclusive daily content. We post 2 or 3 videos a day only for the people who subscribe to our software. But most importantly, you get access to over 6,000 people in a very organized chat to discuss your investment ideas, because Seth always says that he felt alone in how he looked at investments. And a lot of people around the world, if you're around people, you don't necessarily know who's talking these ideas. It allows you to go discuss these ideas. You can go discuss any stock we've discussed today in a group to get everybody's ideas. This is all available for only 90 cents per day. 90 cents per day, you get all of this. It's less than a cup of coffee. If you can increase your returns or decrease your losses by 1 or 2% a year, it could lead to hundreds of thousands, if not millions of dollars. 90 cents a day, 2 ways to sign up. Everythingmoney.com or Patreon. The benefit of directly going to everythingmoney.com is we're not big enough yet to charge sales tax, so you'll save that for quite a while. So 90 cents a day, guys.
Meta Facebook. What are we calling it now, Mo?
I have no idea.
Meta platform.
I don't think anybody knows.
We're going to fumble over this transition, this branding for the next
makes you feel any
year.
better, they do the same on CNBC.
There you go. So I have to. If you want to trade this, Mo, show them how they do this thing.
All right. So I've said for a while, this is a company where. All right. So what is this? Okay. When we move into the sweet spot from a long-term perspective, I want confirmation. I want being in the sweet spot for 3 days, because what I don't want is this. You start moving into the sweet spot with this red line and then it falls apart. This is why you don't just instantly just start go buying right here.
That's what I like doing. I see a little bit of...
You see a peak in there and you get excited and you go buy because you want to be the first one in.
Yep.
You got to wait for confirmation because this thing rolled right down. So right now, let's just wait. Make this thing make an actual steep red line moving up. Well, it hasn't happened for a while, but this is what we need to do. Then we get engulfing candlesticks. This is that whole buy high, sell higher premise. It takes patience, but you can do it. So from a long-term perspective, you got to be patient. Now, short-term, trade this all you want. This thing is great. It's moving into the sweet spot right now. Let the yellow line get in there. Let this get through all these moving averages, run it up to this 347 number, which is the 100-day moving average. This is a great-looking trade, too. Facebook's a good stock because you can go in so many different directions on it. Even today, right now, let's zoom into this. You could be trading this right now from a long-term perspective. You are over 80% on your stochastic. You're getting good buying volume. And right here at 10 o'clock in the morning, you got an excellent engulfing candlestick. And you could have just stayed in. You'd still be in it right now. You would have bought this thing at 324. You're at 326.17 right now. And you're still in it because you are over 80%. So if you want to learn to day trade, swing trade, long-term trade, come and join me in the Bid and Ask Nation. You'll get my Trading 101 series, which is all the rules, my Employed Trader series, which gives you 6 stocks that I go through every single day, and I help you follow them if you're an employed person and don't have time to do this. Exclusive monthly Saturday seminars with me, Q&A sessions, private teaching sessions, and the Bid and Ask community on Discord of 950 plus people. Come and join me and learn these rules.
We have a lot to learn about the metaverse. We'll do it together. Paul, the idea of NFTs is somewhat intriguing, you know. I know we know very little about it, but I saw recently a Gary V clip, and he said, you ready for this? He said in the past 3 months or 4 months, he's made $51 million on NFTs. He said, last night alone, I made $250,000 in my sleep on royalties from NFTs that somehow they had created. And he said, this spoke to me, Paul. He said, and 9 months ago, I had never heard of this term, but I spent 50 hours learning what NFTs are. And who knows? I mean,
great. I know a guy who in 2000 spent 8 months researching GE stock. Do me a favor, go look at GE stock from 2020, from 2000 to 2021, and let me know how those 8 months did for him.
Not good.
I don't know. I don't remember, but I'm quite sure it didn't do very well. Where's GE stock from 2000 to 2020?
Yeah, it was $460, and now it's 92.
Oh, but he did 8 months of research. That's all you need.
Well, I know as soon as someone
all
mentions...
you do is spend 50 hours researching something and you are a genius and it can't work out poorly. Says all the analysts. Listen, how many people in the .com era spent months and months of their years of their life building a .com business? I mean, I'd sit there and say, hey, they dedicated their life to it. They knew their business inside and out. They still went to zero.
And in the end, you don't really believe you need any of this nonsense. You just need to make good value investing decisions on a day-to-day basis.
If you want to do NFTs, by all means, go for it. But don't put so much. I mean, the fact that 9 months ago he never even heard of these and now he's making $50 million, that to me is the, oh boy.
Quintessential bubble.
Yeah. All I need to hear is kids doing it. Oh, wait, there are.
That's our take. Final thumbs up. Join us next video.